Well, it's green across equities in Asia, and SGX Nifty suggesting an uptick of around 100 points, but there is green as far as crude is concerned as well. Remember, that one rallied 9% in the last week, and today as well, that one is racing towards the $58 per barrel mark. Manisha Gupta, as always, joins us with more. Manisha, what is really making crude move this higher?
Oh, well, yes, 2019 definitely has started with a very positive intent for the crude oil prices, at least, as you said, in the first 7 or 8 days of 2019, we have seen nearly 9 to 10% of gains come in for the crude oil prices. One, of course, it is the supply cuts from the OPEC and the 10 members who have joined in as allies. They will cut 1.2 million barrels per day in the month of January. So markets do believe that by the end of this month, by the end of this quarter, we would have taken a big stock of the oversupplies into the market. And then, of course, we are also digesting the reports that nearly 500,000 barrels per day of a cut in the month of December that OPEC already has put out would also be supportive. And then you have seen, strong stimulus measures come in from China in sense of reserve ratio cut, a push in the infrastructure, etc. So that might boost the economy for China, which is the largest importer in the world for crude. And then you also are looking at strong non-farm payroll data from US, etc. The equity markets have rebounded yet again. So the global cues look good today in the morning, and that has been supportive as well.
Absolutely, Manisha. Thanks a lot for that. Global cues look supportive, and that is reflective in the sort of moves that we've seen in the stock prices of all the basic energy as well as basic metals resources across the world. But with that, we get back to the equity markets. Cues coming in from the F&O space. On Friday's trading session, the Nifty ended about 100 points off the lows of the day. But the FIIs, they turned out to be sellers for the fourth consecutive trading session. So 158 crore worth sale in the cash markets. The domestic institutional investors, after 2 days of less buying than FII selling, went ahead and bought about 241 crores. But in index futures, the FII sale continues, close to around 351 crores worth sale in index futures. That meant that the FIIs added close to 8,300 short contracts. This compares with 3,000 long contracts. And the long exposure of the FIIs, which at the start of the series was 50%, moved to around 51, 52%, has now fallen to 48%. The FIIs net short on the index to the tune of 52%. But the options data, that suggests that perhaps the street is watching out for a range of 10,500 to 11,000, which is where the maximum open interest in options is as well. And that is the sort of moves that we've been seeing in the markets. The most active options, if you take a look at what the FIs did on Friday's trading session, they wrote both calls and puts, and most of them were written at 10,700, where the Nifty is 10,725 thereabouts is where the Nifty is, and that is where we saw put writing as well as call writing. So if you take a look at the 10,700 put, close to 3 lakh shares added out there, 10,700 call, close to 2.5 lakh shares added out there. Together, the combined premium is around 350 rupees. So from 10,700, a 300-point uptick on either side and downtick. So that would be around 10,400 to 11,000. That's the range that the street is playing with. The SGX Nifty indicates a positive start. Let's see where we go, given that, that is also the 100-day moving average.
Okay, Mangalam, thank you so much for that. But with that, we have completely run out of time on this edition of Power Breakfast. Bazaar Morning Call comes up next.